Gold is on the march again as it's climbing back up, reaffirming its value in uncertain times. Doubting gold now would be missing the bigger picture. The recent pullback, merely a momentary pause as profit takers stepped in and the dollar gained some strength. Analysts, however, are confident upcoming policies will send gold to record territory in 2025. Remember, even during a strong economy in Trump's first term, gold surged 53%. So what's driving this renewed confidence in gold today? Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. Let's talk about one of President Trump's favorite topics, tax cuts. Tax cuts are one of the reasons why analysts are so bullish on gold. Tax cuts have a major effect on fiscal policy and what could drive gold to new highs in 2025. Trump campaigned heavily on promises of generous tax relief. His proposed tax plans include more cuts for corporations and small businesses, and ending taxes on tip income, overtime pay, and Social Security benefits. At the same time, he's proposed ambitious spending increases. These include more funding for the military, expanded border and immigration enforcement, and greater support for housing and health care. Many Americans appreciate his tax cuts and the tone of his spending plans, but some budget watchdogs are concerned about the impact his proposed tax, tariff, and spending plans could have on deficit and debt. This brings us to the recent pullback in gold prices. You might be wondering, if gold is on the rise, why the pullback? This is where it gets interesting. Analysts who are bullish on gold actually anticipated a pullback if Trump was elected. Before the election results were announced, Purvi Singh, a research analyst at BNP Paribas, made this prediction. The metal may initially drop on concerns about fiscal deficit driving U.S. yields and dollar higher. And that's precisely what occurred. The dollar strengthened and gold pulled back due to their inverse relationship. But this didn't catch experts off guard. They anticipated a brief dip before gold resumes its path. Matthew Jones, a precious metals analyst at Solomon Global, explained, "The promise of fiscal stimulus has pushed bond yields higher as markets price in potential inflation and growth under the Trump administration. This rally in the dollar and yields has put pressure on gold, which traditionally falls as real interest rates rise, reflecting reduced demand for safe haven assets in the short term." You'll notice he said short term. Right after detailing gold's reaction to increased dollar strength, Jones emphasized, "From a longer-term macro perspective, the future is as good as gold." Purvi Singh echoes this optimism. He considers the current momentum a prime buying opportunity, stating, "It is advisable to buy the dips as fundamentals remain constructive on a medium to long-term basis." So if you're wondering if analysts still believe this is a prime time for buying gold, you would be absolutely correct. Economist Peter Schiff is famous for being one of the few who accurately and very publicly predicted the 2008 financial crisis, suggesting that now is an especially good time to invest in gold while metals are under pressure, Schiff declared. "The best Trump trade now is buying the dip in gold." Schiff noted that President Trump might struggle to control deficits and debt with his spending plans and tax cut initiatives. He believes This might make even a better environment for gold. Already, huge budget deficits will soar. To prevent long-term interest rates from skyrocketing too, the Fed will return to quantitative easing. In simple terms, this means firing up the money printing machines. Macroeconomic forecaster Stephanie Pomboy acknowledges the strengthening dollar but refers to that and the drop in gold as a very temporary blip in what will continue to be a massive bull market for gold. When we look ahead at gold, don't let recent volatility get in the way of understanding that 2025 has a lot of uncertainty and the economy is still in the same exact position. Inflation, debt, de-dollarization, all the triggers of gold are there. Don't ignore what the experts are saying. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.